There's a story behind Crocs, the counterintuitive comeback story of leaning into being ugly to avoid bankruptcy that most people have never heard. This is Capital Logic, and today we are telling it. Before we dive in, if you find value here, hit like and subscribe so you never miss an episode. Let's begin. Crocs, a company once ridiculed for its ugly shoes, intentionally leaned into that criticism to orchestrate one of fashion's most unexpected and profitable comebacks. You might think it was pure luck, or maybe just a fleeting trend, but the truth is far more strategic. Stay until the end. I'll break down 3 lessons from Crocs' playbook you can apply to your business this week. If you want business breakdowns you can actually use, hit subscribe and the bell. In 2002, a trio of friends to Lyndon Hanson, Scott Siemens, and George Bodeker Jr. to set out to create the ultimate boating shoe. Their vision wasn't about high fashion or runway trends. It was about pure, unadulterated function. They stumbled upon a proprietary closed-cell resin, a material they dubbed Croslite, which was lightweight, odor-resistant, and non-marking. Perfect for slippery boat decks, right? They weren't trying to make a statement, just a better shoe. They called their creation Crocs, and their first model, the Beach, debuted at the Fort Lauderdale Boat Show in 2002. Now imagine this, a chunky, brightly colored foam-like clog, unlike anything else on the market. It was by most conventional fashion standards an anomaly. Yet, something unexpected happened. All 200 pairs they produced for the show sold out. All of them. This wasn't a slow burn, it was an instant, albeit small-scale, sensation. What was it about this strange, hole-ridden shoe that captivated people? Was it the comfort? The sheer novelty? Or perhaps, even then, a subconscious rebellion against the restrictive norms of footwear? Whatever the reason, Crocs had tapped into something. The company grew at an astonishing pace. By 2007, just 5 years after its humble boat show debut, Crocs' revenue had soared to $847.4 million. They were everywhere to on nurses, chefs, gardeners, and, eventually, even on celebrities. They were a global phenomenon, seemingly unstoppable. But as with any meteoric rise, a backlash was inevitable. The very qualities that made Crocs unique to their distinctive shape, their vibrant colors, their unapologetic practicality, became targets. Fashion critics scoffed. The public polarized. You either loved them or you hated them, and the hated them camp grew increasingly vocal. The word ugly became synonymous with the brand. What started as a functional innovation had, for many, devolved into a fashion faux pas. And then, the bottom fell out. The global financial crisis of 2008 hit, and suddenly, discretionary spending on polarizing footwear wasn't a priority for many consumers. Crocs, which had been riding high on its unique aesthetic, found that aesthetic turning into a massive liability. The company reported a staggering net loss of $185.1 million in 2008. Their stock price, which had once soared to over $70 in 2007, plummeted to under $1 by late 2008. Think about that for a moment. A company that had gone from zero to nearly $1 billion in revenue in half a decade was now teetering on the edge of bankruptcy. The market had decided. The critics had won. Crocs were, by all accounts, a fad that had run its course. A quirky experiment that had failed. The prevailing wisdom was clear. Their core product was simply too ugly, too niche, too much of a joke to survive. How could a company built on such a divisive product possibly recover from such a catastrophic financial collapse? This was the precipice. The moment where most companies would either try to shed their controversial past, reinvent themselves entirely, or simply disappear. But Crocs did something different. Something counterintuitive. Instead of running from the ugly label, they turned to face it head on. Around 2009, as the company was still reeling from its financial woes, a new strategy began to emerge. It wasn't about making Crocs prettier. It wasn't about trying to conform to traditional fashion standards. It was about embracing the very thing that everyone said was their downfall. They launched a marketing campaign with a bold, almost defiant slogan: "Ugly can be beautiful." This wasn't just a catchy phrase, it was a psychological pivot. It was an acknowledgement, a wink, and a nod to every critic and every detractor. Yes, they seemed to say, we know our shoes are different. We know they're not for everyone. And you know what? That's precisely the point. They transformed their perceived weakness into a unique selling proposition. The ugly wasn't a flaw, it was a feature. It was authenticity. It was comfort without compromise. This strategic shift wasn't just about marketing, it was about understanding their core customer. Who were the people still buying Crocs? even when they were ridiculed. They were people who prioritized comfort, practicality, and perhaps a touch of individuality. They were people who weren't afraid to stand out, or perhaps simply didn't care what others thought. Crocs began to lean into this anti-fashion stance, positioning themselves not as a brand despite being ugly, but because of it. They became a symbol of unapologetic self-expression, a badge of authenticity in a world obsessed with fleeting trends. This wasn't just about survival, it was about finding strength in anomaly. But how do you turn a reputation for being ugly into a multi-billion-dollar empire? How do you convince people to pay for something that the fashion world has largely dismissed? And what happens when the world, quite unexpectedly, starts to catch up to your vision of comfort and individuality? But the real turning point, the moment Crocs truly began to understand its own rebellious spirit, wasn't just about acknowledging its looks. It was about empowering you to define them. Enter Jibbitz. In 2006, Crocs made a seemingly small acquisition, spending $10 million on a little company that made decorative charms for their shoes. At the time, it might have seemed like a quirky accessory, a novelty, but it was a stroke of genius, a move that would fundamentally alter the brand's trajectory. Jibbitz weren't just decorations, they were canvas. They transformed a simple, functional shoe into a deeply personal statement. Suddenly, your Crocs weren't just a pair of shoes, they were your shoes, adorned with symbols of your hobbies, your passions, your personality. This wasn't just about adding flair, it was about fostering an emotional connection, turning a utilitarian product into a vehicle for self-expression. Think about it. How many footwear brands allow you to customize your shoes with hundreds of interchangeable pieces, reflecting every facet of your life? This personalization became a powerful differentiator, a subtle but profound way to build community around the brand. And the results speak for themselves. By 2021, Jibbitz charms alone generated over $100 million in revenue. That $10 million acquisition paid off tenfold, not just in direct sales, but in transforming Crocs from a polarizing product into a beloved, customizable icon. This embrace of individuality, this permission to be unapologetically you, laid the groundwork for Crocs' most audacious and perhaps most counterintuitive move, its foray into high fashion. For years, Crocs have been the punchline of fashion jokes, the antithesis of style. So, when Balenciaga, one of the world's most avant-garde luxury brands, announced a collaboration with Crocs in 2017, the fashion world collectively gasped. Was this a joke? A declaration of irony? Or something more profound? It was in fact a masterclass in brand elevation. Balenciaga took the classic Crocs clog, elevated it onto a platform sole, and slapped an $850 price tag on it. The fashion elite scoffed, critics derided, but the shoes, the Balenciaga X Crocs platform clog, sold out before they even hit stores. This wasn't just a collaboration, it was a cultural moment. It signaled that Crocs had transcended its humble origins. It proved that its inherent ugliness could be recontextualized as edgy, as ironic, as a statement against the conventional. This wasn't a fluke. Balenciaga returned for another collaboration in 2021, and other high-profile partnerships followed, from rapper Post Malone to designer Christopher Kane, even KFC. Each collaboration generated immense media buzz, sold out instantly, and often fetched resale prices over 1,000% of retail. These partnerships didn't just expand Crocs' market. They cemented its counterculture appeal, transforming it from a symbol of anti-fashion into a badge of authentic, self-aware style. It allowed Crocs to tap into a luxury market without sacrificing its core identity, demonstrating that authenticity, even if it comes in the form of a brightly colored foam clog, can command premium prices and cultural cachet. This journey, from accidental success to near bankruptcy, from embracing its ugly truth to empowering personalization and conquering high fashion, culminated in a remarkable financial comeback. Remember that dark period in 2008, when the company reported a net loss of $185.1 million and its stock plummeted from over $70 to under $1. Fast forward just over a decade, and the narrative couldn't be more different. The pandemic, ironically, became an unexpected catalyst. As the world shifted to remote work and prioritized comfort, Crocs found itself perfectly positioned. Its classic clog sales surged by 75% in 2020 alone. The company also made a significant goodwill gesture, donating over 860,000 pairs of shoes to healthcare workers during the COVID-19 pandemic, further solidifying its image as a brand that cares and provides essential comfort. Under CEO Andrew Rees, who took the helm in 2017, Crocs streamlined its operations, focused on its core clog, and doubled down on its direct-to-consumer strategy. The results were staggering. Revenue, which had peaked at $847.4 million in 2007, soared to $1.386 billion in 2020, a 12.6% increase year over year. And that was just the beginning. By 2021, revenue reached an astonishing $2.3 billion, a 66.9% increase over the previous year, exceeding even their own ambitious guidance. The company's market capitalization, once teetering on the brink, reached over $7 billion in 2021. What's truly remarkable is the consistency of their financial performance. Crocs' gross margin consistently hovers around 55 to 60%, significantly higher than many traditional footwear brands. This enviable profitability is largely due to its proprietary cross-light material and an incredibly efficient, injection-molded manufacturing process that reduces complexity and cost. They've also strategically diversified, acquiring Hey Dude in 2022 for $2.5 billion, further solidifying their position as a comfort and authenticity powerhouse, expanding their portfolio with another casual, comfort-focused brand. Even beyond the pandemic's peak, Crocs has shown sustained growth, achieving its highest quarterly revenue ever in Q3 2023, hitting $1.05 billion. The clogs and sandals segment, dominated by its iconic classic clog, consistently accounts for over 70% of total revenue, proving the enduring dominance of its core product. Crocs didn't just survive, it thrived. It didn't just recover, it redefined what a footwear brand could be. It embraced its perceived flaws, turned them into strengths, and built a global empire on the foundation of comfort, personalization, and unapologetic authenticity. But how do they manage to do this? And what can you learn from their extraordinary journey? Now here are 3 lessons from Crocs Playbook you can apply to your own business. Lesson 1. Embrace your unique identity. Identify what makes your product or service stand out, even if it's unconventional, and build your brand narrative around that authenticity. Crocs didn't try to be something they weren't. They leaned into the ugly and found their niche, turning a perceived weakness into a strength. Lesson 2. Focus on core strengths. When facing challenges, streamline operations, eliminate distractions, and double down on the products or services that truly define your business and offer value. Crocs shed countless underperforming ventures and returned to the simple, profitable clog that started it all, proving that sometimes less really is more. Lesson 3. Adapt and innovate strategically. Look for complementary products or services, like gibbets or strategic acquisitions, that enhance customer experience and open new revenue streams. Crocs understood that while their core product was king, smart additions could amplify its appeal and create an entirely new ecosystem around it. If you want more business breakdowns you can actually use, subscribe. I'll see you in the next one. Crocs, the counterintuitive comeback story of leaning into being ugly to avoid bankruptcy, is one example of a pattern that repeats across the most successful businesses in history. Once you see it, you cannot unsee it. Subscribe to Capital Logic, and we will keep showing you how the game is really played. See you next time.